Webcam is working. Okay, very nice. It was Teams indeed. So even though I closed the meeting, the Teams app in the background was still active. And well, if the Teams thing, the app is still active in the background, then somehow the webcam doesn't work. So anyway, here we are. And we're going to check the charts as price has been moving to the upside. Now, the reason I don't do a video right now, like a 1 p.m. shorter Bitcoin update, is first of all, I couldn't have made the update because I was in a meeting from 11:30 till just now. It just finished. So I had no time to do the video. And if I now want to do the video, I first have to prepare the chart, record the video, potentially edit, then upload it. And I would be like an hour late, or maybe 1.5 hours. And of course, you all have expectations for me to upload stuff at like 7 a.m., 7 p.m., 1 p.m. So I try to follow the time as good as I can, besides all my other business stuff. But as you know, sometimes I can't because of meetings and other stuff that are related or not related to trading in this case, because of my other business. So always when I say 7 a.m. upload, 1 p.m. upload, and 7 p.m., you got to think a bit flexible. 7 p.m. means 7 till 8. 1 p.m. means 1 till 2. You should expect a video to come or a live stream in between those boundaries. It's just because my agenda with my other business, keynote speaking, I do more than YouTube. So just to make sure the expectations are right. But for the people that are here more often, you guys know. Okay, what we're going to do is we're going to go through Elliott Waves, and we are going through the different time frames. It's actually quite interesting, of course, that now price took the high, right? So in the morning video, what I was explaining at the end was that we had some bullish divergences forming over here, right? And these continue to form. First, we had them over here. Price dropped a little bit. We had more bullish CVD divergences on the 5-minute with this low, higher low in price, lower low on the CVD. And these kept building as price was moving to the upside, which of course increases probabilities. Price will push towards the upside as well. Another thing that is important is that single print resistance area that I was talking about in the video, which is the high over here. So this area, this wick, it's like a single print wick. It's a bit difficult to explain, but let's just say there's barely any volume and any time spent in this area, which means the first time you hit it, it very often acts as resistance. But then the moment you get to it a second time, probabilities really increase to just fill the whole thing. And that is what happens. You filled it, you wick above, and now we are basically ranging right around the high. And you will see this more often, not necessarily with the wicks of candles. It's not too common to get such a wick on the 15-minute, but you also tend to see this in other structures like candles that move very quickly. So over here on the lower time frames, on the 5-minute, we also hit the inefficiency that we have over here on the 5-minute. Let me actually just show you. It's a bit of education immediately from the start. So over here we hit the inefficiency once, right? Price moved up, it never closed below this area. It never wicked below this area. It came back, yeah, but we moved to the upside. So over here, we acted as support resistance before this 5-minute gap was entered. If price would have came down and closed below these candles here, probabilities were very high to fill this whole inefficiency. Now, this is of course not Elliott Wave related, but hey, trading is more than just Elliott Waves. I mean, for me, everyone's strategy is different, but it's always good to know these little bits of information, right? Because you can use this in your trading. And then, of course, in combination with bullish CVD divergences, and then price hitting this area for the second time, getting inside, it could be a potential long if it fits your strategy, with the target being the high, because that is basically a very simple single print trade. So there you go. Let me go to through my folders and remove. I do like to remove it from now. We remove this key level as well, and the single prints. And what we're going to do is we're going to zoom out, because of course now things start to be very, very interesting. Let's go to the daily. And by the way, let's first also say hi to chat, as I actually always do, but I immediately jumped in the content, which is also important. But what's up, everyone? Wati, Pistachio, he closed his shorts. That's a smart boy. The notification. Flotty, what's up? How you doing? Also, Randlewa, thanks for notifying me about this as well. And good to have you here. Andreas Zan, Gabriel, a lot of the same names, of course, coming back every time. Good to have you here. Valorant Chill Music, what's up? Some chill music on the background. Could be just. The Koenz content channel doesn't give me notifications anymore. Damn, we're doing something wrong. Let me know if you actually, well, probably not for this stream, but maybe for the video this morning. Let me check. Yeah, I did get a notification because I have a second account that I sub on this Koenz trading account just to know if notifications are pushed or not. So I know that the video of this morning, I got a notification on my second account. So they do work, but yeah, I don't know. Maybe it's the little bell. Fully expecting the update. Stason 2K, what's up, man? Good to have you here as well. Ave in Mouville. Yeah, the live in time. Absolutely. I have a short position at 29,350. Should I close? That's your plan. Based on your plan and your strategy, you have to make a decision. Because no one knows what price is going to do. And the best thing that you can do is create a strategy based on the favorite tools that you like to use. Build statistics on these tools. Put them together. Then create statistics on the combination, make a plan, including what is going to be your TPs every time, where's your stop loss, where's your entries, based on what, entry requirements, check all the boxes. And then the moment you enter, you know exactly what your win rate is going to be over 100 trades, because that's, you tested it. So the question basically comes from not knowing your plan and your strategy, which is a minimum requirement if you want to be a profitable trader, because else it's gambling. So I would recommend in this non-financial advice live stream to, whatever happens, even if price goes down and you somehow end up in profit, I would follow the steps that I just mentioned, which takes time, will take a couple of months, but then you come back and you'll be saying, yo, man, that was the best advice I've gotten, because now I know my plan and I don't have to ask these type of questions in a YouTube chat. So yeah, should I close? I mean, it sounds like you didn't really have a plan. So from that perspective, yeah, but you shouldn't even have entered, right? You know what I mean? So yeah. Make a solid plan if you're trading, right? We're not gambling. It's a business. We're busy with a business. Trading is our business. We're trying to extract money for a consistent period of time. So just like you set up a business and build a business, what you have to do is make a strategy, make a plan, have the finances, and all the different elements that come back in a business should be in your trading plan. Mohammed, I swear the moment everyone greets and apes in, it will dump really hard. Happened many, many times. That is definitely still a potential. we did take the high now, so that is interesting. That is how liquidity is created. I will talk about the psychology scenarios. Justin Chu, you joined as a member. How to join in the gold Discord? Did you send me an email, Justin Chu? Because everyone that sends me an email, I send them an email back, and I give you the gold role. So just send me a DM in Discord, and I will manage it. I will make sure to give you access. Thanks for being in gold as well. Nice little badge there. Ranga, Jonat Sandu, QZ World, what's up, man? I'm doing good. The Opslag, who is it, Kerol? Misdeck X, have a great stream. Bitcoin, Ethereum, if I have time, but don't have too much time. Love your content. Thanks, Earth Nachanon. There you go. First time you're here, I believe. Welcome. Good to have you here. Still ABC? Potentially, yes. My man Koen. Okay. Let's go. Oh, you sent 40. Oh, so you're a new... Oh, then you must be a new member. Well, the thing is, so you probably just became a new member. First of all, welcome. Thanks for being a member. And secondly, I was in a business meeting from 11:30 till, well, just now. So I literally just finished, and I didn't even had time to look anywhere except for making sure I went live, because of course people expect some content between 1 and 2 p.m. That's why I have the 1 p.m. So, Justin, I'll make sure to get you sorted. Okay, I have some interesting thoughts to share, though. And I'm going to be very, very transparent as well on probabilities from an Elliott Wave perspective. So it's not about what does Koen want, right? Because I don't care if it goes up or down, but probabilities from an Elliott Wave perspective. And for some, it will be very surprising. For others, maybe not. What I am going to do, though, is first of all, I think I am going to the high time frame scenarios, and we're really going to get a full run through of all my folders. So you're going to get a complete inside look into first of all, the different scenarios, bullish and bearish, because Elliott waves, you have to have a bullish and a bearish scenario. But then I will talk about the probabilities from an Elliott wave point of view, right? Yeah, of course, the local price action is important. So we will go into what's happening locally, but that will be at the end, as we're going to be zooming into the price from the outside, high time frame where we are now. This is the bullish scenario, to then the lower time frame scenario. And what I will try to do is I start with all the bullish scenarios per time frame. So we're going to zoom in, zoom in, zoom in, zoom in, zoom in. And then I'm going to start back on the daily, which is what you see now. And then I start with the bearish scenario, and we're going to zoom in on all the different time frames. And then we get to the probabilities of bullish versus bearish, right? So that's what we're going to do today. Yeah, let's get this party started. And exactly, the question of Valorant chill music, what's the highest probability? We're going to figure that one out together. Erik, mooi om weer naar je analytische cijfers te kijken. Thanks. Welkom. Goed dat je er wederom bent. Scythe Zubar, also in a short. The reason I joined the channel is because you're at a good place. Thank Justin, man. Welcome. Little welcome clap for Justin. Just put some emotes in the group here. Thanks, Justin. Elliott Waves is, we are here for Elliott Waves. So I can see some hearts coming as well. So many people clicking the 100 and the hearts. Bullish scenario. Let's go through the content and then I come back to the chat. Okay, so first of all, this is the high time frame. Shall we even do the cycle? Are we going to do cycle, macro, height? Question to you, eh? Shall we start with the cycle scenarios? Okay, cycle, macro, daily, 12-hour, 4-hour, all the way down? Or do we want to start on the daily? Give me an opinion here. I can start all the way on the cycle. Let's do it all. I mean, why not? From top, cycle and gradually zoom in. Okay, there we go. Okay, everyone better be prepared. On the log scale, up at Okay, also on the cycle, of course, we have a bullish and a bearish scenario. Just to make sure people understand as well, right? Elliott Waves is about having both a scenario to the up and the downside, and then it's about calculating probabilities based on the rules. So, okay, let's get through it. And Raymond, that might be possible. Raymond, can you please tell me if you are X? Because I'm always doubting and I never really pay attention. If I don't know who's X. I'm not sure who X is. It's a change of name. Okay, everyone, let's get this party started. I'll go through the chat in a second, but you guys are in the corner of my eye, right? Cycle count. We have the bullish and the bearish count, but I want to start with the bullish scenarios, and then we get into the bearish scenarios. This is the Bitstamp chart. You have a lot of history over here. And in the bullish scenario, it starts to look a little bit like you have the traditional markets where price will eventually continue towards the upside, but you have the dumps in between. If you go to an S&P 500 or NASDAQ or whatever it is, you always see like the chart tends to have an upwards trend throughout the decades, right? Throughout the decades. But always you have a little bit of like dips in the meantime. So I have two scenarios. This is the bullish one, where we have these dips as wave 2. So the wave 2s are building up, or 1-2s, I should say. So we have a wave 1, 2, 1, 2, 1, 2. We can expect these to come till eventually you get a push towards the upside, which can take many, many years. I also have a target in mind based on Elliott Wave time and price, which I'll talk to you about in a second. Secondly, secondly, we add some of the fibs because we want to talk about Elliott waves, which are based on rules. So we need to get to know the probabilities based on rules. The first wave 2 retraced to the 236. Very rare for a wave 2. But what is interesting is that the second wave 2 went to the 382. The third wave 2 in green retraced to the 0.5. So you can see that the lows are getting deeper. But while the lows get deeper, the highs get shorter. Maybe not in price, because of course the jump from 3,000 to 69 is bigger on paper than from 188 to 19K. But from a trend-based fib extension standpoint on the logarithmic scale, because we're on a very high time frame, you can see that we have a wave 1 in red. You take a trend-based fib from the low to the high, put it on the low of 2, and you see that the yellow one is between the or hit the 0.786, meaning that from a log standpoint, this wave is shorter than wave 1, the red wave 1. Sorry, it's both a wave 1, but this one is shorter. It hit the 786, and now the green one is also shorter. And indeed, with the index, you have another move up and a move down, but it doesn't change my cycle count. Good point by Vitalian there. If you go to the index chart, you have from $0 to $25, you have another move up. So you see that the lows are getting deeper from a fib standpoint, but the highs are getting shorter. So that creates this movement, right? Where you have basically it's almost like what's that indicator called with the what is that? The cloud, Ishimoku cloud, I believe. So based on this, we can basically get a little bit of an estimation for a potential another wave 1. So we have done 1, 2, 1, 2, 1, 2. We look for another 1, 2. But if we know like, hey, the target of another wave 1 might be shorter than the 786 and around the 618 or maybe even the 05, but I don't really think, then we can get a potential target 0.618 to the 786 taken from the low to the high of 1 to the low of 2, which is between 100K and $180,000 per Bitcoin, right? Before then, you could expect another move down for a retracement where the next wave 2 might be deeper or hit to 05 because we actually missed out on hitting it. But you can see 382, almost 05. So then we might actually hit the 05. So we might go back to, let's say, 60, 69K, right? We have the bull market, 1, 2, 3, 4, 5. And then we again go to the downside. But you might never see 15K again, right? So in this scenario. Now, if we then also add the wave 2 comparisons in time, then this wave 2 is a little bit shorter in time compared to the red wave 2, right? But this is a lower degree wave 2, which is normal. Preferably a lower degree wave 2 takes a bit less time than the higher degree wave 2. Now the green wave 2 took the exact same amount of, or actually even a little bit shorter actually than, no, what am I saying? The second wave 2 took the exact same time as the yellow wave 2. So the green wave 2 is the same length in time as the yellow wave 2. Now with that then in mind, right, we can expect a potential blue wave 2 to be either around the same time as the green wave 2 from the all-time high to 15.4K, or potentially a bit shorter, right? I hope it's not going to become too complex now, because now what we're going to do is combine the impulses as well. So when we look at the impulses, this impulse is a bit longer in time, 1.38, but then you can see the next one hit the 1-to-1. So again, the green wave 1 is shorter than the yellow wave 1 in time. Now, if we then combine all of this, what I just mentioned, to get a target for Bitcoin and a time perspective for Bitcoin in the bullish scenario, the cycle count, then what we can expect is price to go to around the 0.618 at least. I just targeted this area because of the 786 and the 618 here. The 100K is just below. And time-wise, if we think about, hey, the impulses might become a bit shorter, right? Then I have the 0.618 to the 1-to-1 of the low to the high of the green one. So then we're talking, and I would personally think more the target is then going to be around the 786 1-to-1, so more at the right side of this box, because we're talking about a target of 100K to 180K between September 24 and October 25. But I am then more aiming towards this second area between the 786 and the 1-to-1, which is March 25 to October 25. So basically 2025 for then an estimation of the bull market high, before we then get another move to the downside, where based on what we see, the retracement is becoming deeper, 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 from the 236 to the 382 to the 0.5, we can get an estimation of what the low can be for wave 2 by pulling a fib from the low to the high of wherever that's going to be, right? It's going to be an estimation. We toggle on, the 0.5, it's already there, but let's make it blue for the sake of color coding everything. And then you can see the 0.5 now, if we hit the lower edge of this box, so we're going to end at around 100K, right? You can see that the 0.5, is it log scale? Yes. The 0.5 is going to be around 40K. If we move it to the upside, 786 as a target, the 0.5 is going to be around 50K. So we get a very good idea of this potential bull market where, hey, we could get a move up, reach target, but then the next retracement down is going to go to 40 to 50K. And then after the 40 to 50K, you're going to get a new bull cycle to the upside. And what you then create is you create a trend that you also see in traditional markets. So you're going to create this type of stuff, right? So you know what I mean. Now, what I haven't spoken about yet is the two pink bar patterns. So these are bar patterns just to compare, right? How is price doing here for a potential new bull market compared to other starts of bull markets, right? This is a bars pattern, which is a copy from the chart from, history, and you can overlay it on current price action. It's not edited in size. I just showed you. It's the exact, it's just like a copy. I could even do it maybe a bit like tada. And then we see what price is doing right now. So we put it on, let me see here, current price action. And what you see is we're actually doing quite well compared to the bull market that started here. Even if I go to a weekly time frame, but also on a monthly, you can see we're basically around the same price compared to what the pink bars pattern is showing us. And if I use the one of the COVID low, which is this one over here, right? Maybe I have to adjust this one just a little like this. And then you put it on top of where price is now. Then what you can see also here is we're actually not doing too bad. Yes, price moved to the upside a bit quicker, but look how long this range was before then a move down. You see what I mean? So this move down would have been then February 24 that you get another dump, basically, in this scenario. So you can see it's not doing too bad, right? That's basically in the bullish scenario, that's the thing. Now, as long as we don't take 15.4K, simply said, this bullish scenario is active. If we then move towards the macro, so I quickly have to change charts here, go to the weekly. So now we are going to zoom in. We'll first go through all the bullish scenarios and then we get through the bearish scenarios, right? And then we get to the probabilities. So on the macro, what we are looking for then more locally, where's my, oh, here it is. Get up, get to the bull, there we go. So we are then looking, actually I should make this blue just to make sure I really combine everything, to be honest. So there we go. So in the bullish cycle scenario, right, this is your low. You're going to move to the upside, move down, and this is your wave 2. Remember, this wave 2 is the same amount of time as this wave 2, right, on the monthly chart. So preferably in the bullish scenario, this is your low, and you're going to move up, right? So we have a 5-wave finished impulse, corrective structure to the downside, and a WXY-XZ. You know, it has to, or a WXY, but it's very, very sharp for a WXY unless it is a double zigzag, which then is a 535 correction and another 535. So that is still a potential there. So either a double zigzag WXY, sharp correction, or a WXY-XZ, where then price moves towards the upside. Now the low over here has been made before the 0.382 fib time taken from the low to the high of wave 1, which is a bit less common. Usually you have corrective structures that do correct a bit longer than the 0.382, but on these like time frames, it's not too like crazy because over here you can see that also the 382 from the previous cycle, the low was also made just before the 0.382, which is right here. And of course, if you remember as well from the cycle, this was a 382 retracement from the low to the high. So it reached the 382 and it ended just before the 0.382 fib time, right? We go back. So in this scenario, this being the low, in the bullish scenario is very much possible, right? Of course, most commonly, if we zoom into 50-minute time frame stuff, most commonly a wave 2 retraces to these fibs here, 05 to the 786. But on a cycle with the waves that are being formed, it of course works a little bit different. So then we zoom in to the high time frame bullish scenario, which is we go to the daily, we toggle log off. Now, right, this is the first time frame where we don't use log anymore. So the fibs are also not in log. And you also actually see the bearish scenario at the same time here, or a bearish scenario. But we're then looking here for a wave A or 1, 3-wave corrective structure. 2 or B is in, this is going to be your move to the upside. 2 or B retraced to the 0.382. And now we start to get into the time frames where Fibonacci is very important because, especially on dailies as well, a fib taken from the low to the high, a wave 2, most commonly retraces to the 0.5 to the 786, which is below. The 382 is less common for a wave 2 and more common for a wave B. And this is the reason why I also have an ABC on my chart. Because the moment price moves up in a 5-wave structure, it doesn't yet mean you're going to reach all-time highs. It can still be a zigzag for a move down. Even in this scenario, where you start 5 waves, the low is in and you're moving up, yes, you will have a significant move to the upside as the wave C target at the moment is over here between 40.5K and 44K. But it can still then turn around, right? So we know our resistance. And you will see in the macro bearish scenario, this is actually very important resistance as well. The 40K area, 3940K is incredibly important. So even with this scenario, this being the low, move to the upside, 5 waves. We have to wait and see if we get a wave 3 to at least 160, preferably at least to the 1.618, sitting at 50K. Or if we turn around here, because we don't know. All we know at the moment is that price moves up, and then depending on the move up, for a wave 3, what you really want to see is you want to see this. A wave 3 should be the strongest, most impulsive, highest volume wave, right? This is where the moves are made, right? If I zoom out, this is where the moves are made, right? In a few amount of weeks, you cover a lot of price. That is what you want to see. You don't want to see this shit here, right? What we're having now. You want to see this. Boom. Right? So as long as you don't get that, the probabilities of a wave C are there, and also volume has to move to the upside with price moving to the upside as well. Because, and that's mainly psychology. People are going to FOMO in, right? Buy, 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 buy. So if we then, in this bullish scenario, look at the corrective structure here. Well, this is a real deep dive, eh? Then I have to show you this. So now we zoom into the 12 hour. So the corrective structure where you could have the bottom over here and move up is a running flat. Now this is where things start actually becoming very interesting, because of course, besides you can write notes down as well, right? Hopefully you do at the same time for some people, but as mentioned, the 382 retracement for a wave 2, less common compared to a wave B target, but it is a target nonetheless. So it can still be a wave 3 to the upside if it flies. But this is where things start to become a bit like annoying from an Elliott Wave point of view, I suppose. Like the thing is, a running flat ABC is incredibly rare. And therefore a running flat never has high probabilities unless everything else fails. The most common flat pattern is an expanding flat, which is a 3-3-5. Wave B goes above wave A, wave C goes far below wave A. The second flat pattern is a regular flat ABC, where wave B just takes the high of A, wave C just takes the low of A. And then you have the running flat where wave C does not take the low of A, which is very rare. Very, very rare. Now you could have maybe seen somewhere the scenario of this being a regular flat where wave C ends below wave A. The problem, however, is your wave B. Because inside a flat, wave B has an incredibly low probability of being a flat. So a flat in a wave, actually, so officially by the newest rules of Elliott Wave International, a wave B flat inside a bigger flat structure is not allowed. But then again, it's all about probabilities, and the numbers from Mr. Rich Schwannel, which is an analyst, and he records a lot of data about Elliott Waves, which you can find in Discord, educational content, Elliott Waves. You just download this right here, right? You will see that sometimes it can happen. It's just low probabilities, which therefore means this scenario has very, very low probabilities, even compared to a running flat as well. So, okay, doesn't look too good, but it is possible, because if it wasn't possible, then a running flat wouldn't be a scenario in Elliott Waves, right? Then we move from this low to the upside. Peyton says had a running flat in 2020. Okay, so 3 years apart, we might get the actually I wasn't yet counting in 2020, so I wouldn't know. But we might get a repeat. So if this is the low, we're moving towards the upside, right? There is 2 scenarios here. Well, actually, it's basically now one. I want to start with then the most probable one, which is the 112. So in this scenario, with this being the low, and you're going to moving like look for a wave 3 now, right? We're working on the beginning of a wave 3, which means you eventually have a 1-2-1-2. You get a 3-4-5-4-5. And then that is by itself, most likely, only a wave 1 on an even higher time frame. So you're going to get a 1-2-1-2, Then you get 3, 4, 5, 4, 5 to finish the green 5, which is then a yellow wave 1, yellow wave 2, and then you get a big lift off to the upside for like very, very high prices, right? In the bullish scenario. So I think the most probable scenario at the moment locally here compared to the expanding flat, which I'll show you in a second, is then a double 1, 2, 1, 2, 1, 2, and you move now inside a wave 3. But also here, it's just not great. It's not really following the nice Elliott Wave rules. Reason being that a wave 1 in blue and a wave 2 in blue are the lower degree count in this particular scenario. So green is the higher degree Elliott Wave count. So we have wave 1, 2, 3, 4, 5. And inside wave 3, we have 1, 2, 3, 4, 5 in blue. So wave blue, or the blue count, is a lower degree Elliott Wave count, which means most commonly that the lower degree waves are going to be shorter in time, price, or both. Now this wave 1 is longer in price compared to the first wave 1, just by a wick though. And the second wave 2 is longer in price and time compared to a higher degree wave 2, which is very interesting. And something that you don't really like to see, because we're talking about a lower degree. And in Elliott waves are price related, of course, but they are very, very much time related as well. If they were not time related, then we wouldn't work in Elliott wave degrees, right? Elliott wave wouldn't have degrees over here if it wasn't time related. So we have degrees because of time. Super millennium is like the decade chart or whatever, right? And then you go to super cycle, we start to get to like the yearly charts and the cycle primary, we start to get to the monthly charts, all the way to minuscule, where we go to like a 1 minute, 3 minute, 5 minute, 50-minute charts, right? Micro 30-minute charts. So it is time related. And the fact that the lower degree over here is longer in price, longer in time, it's a bit meh. I can't say it any. It's not nice. It is possible, yeah, okay. But there's always a probability, but it's not nice. You know what I mean? What was nice, however, is that at least you had bullish CVD divergences. So from the low of 2 to the other low of 2, you had bullish CVD, meaning higher low in price, lower low on the CVD, which I will show you here. If I go to the 1 hour chart and we'll zoom out, then what you can see here is a higher low in price, but then look at the which line was it? I need to get the low. Which candle is the low here? It was the green candle. So from the green candle, move to the downside. We take this low, and if you look to the right side now, so let me remove. You can probably. Oh wait, you can't see it because it's behind my webcam. Let me zoom out. Oh yeah, you can just see it now. So on the right side, right next to my webcam, what you can see, I released the mouse, is you can see that there. You can see that the horizontal cursor line has been broken by the yellow line, right? Meaning you have a higher low in price, but you have a lower low on the yellow CVD. So there's absorption going on of market shorts. That's what it shows. There is more shorting going on over here than there was shorting going on over here. However, price did not make a lower low, even though there's more shorting, meaning there's big limit long positions absorbing market shorts to then push price towards the upside. The yellow line followed with bullish CVDs over here, higher low in price, but on blue now, the blue line followed, lower low on blue. Right? And then eventually the rest is history, of course, we move towards the upside. Now, bullish CVD divergences is something that I do like to see when we are in double 1-2 scenarios. So that is at least a thing that supports this particular scenario. A scenario which looks a little less probable, now I have to move this as well, is an expanding diagonal, because an expanding diagonal is also, again, a very rare structure in Elliott waves. And we then have a 5-wave move. By the way, for the people that just arrived, we are going through all the time frames. First, all the bullish scenarios from the cycle, which I've just done, to the macro, to the daily, to the 12, 4-hour, and then we get to the local price action, and then we do all the bearish scenarios and end with the probabilities. Okay, just so I see many new people here as well. So just so you know what we're doing at the moment, but we will get to where we are right now and the probabilities. So this will be a complete video, like everything. Over here, compared to the double 1-2, I probably favor the double 1-2 more than the expanding diagonal because of this move towards the upside that we have right now. It can still be a wave 1 or 5. If price drops now after taking this high, it's a swing failure pattern, as you can see on the 4-hour. If price would drop now, then one can count this as a 1, 2, 3, 4, and then a wave 5. This wick is, of course, like somewhat of an anomaly, I suppose. So there is still the potential of this being a 5-wave structure. However, an expanding diagonal in Elliott waves is very, very rare. So keep in mind what I'm saying here as well, especially if you're making notes, that a running flat is very rare. And an expanding diagonal is very rare. So what are the probabilities of a rare plus a rare in Elliott waves, right? It's not very high, which therefore also means I favor the double 1-2, as a 1-2 is, I suppose, a bit more quote unquote common, even though it doesn't look nice because the second 1-2 is longer in price and time. But you know, that's the scenario that currently has higher probabilities compared to this. So in this scenario, you have the end of wave 1 or 5 inside this box over here, target area 4, your wave 5, taken from the low to the high of 3 to the low of 4. Wave 5 has to be longer than wave 3, has to cause the 1-to-1. Wave 3 has to be longer than wave 1. That also happened even though wave 3 did not reach the common targets for wave 3, which starts with the 1.272, the 1.38, and then the 1.618. That is your most common target area for wave 3 in an expanding structure. Wave 2 went to the 0.5, less common in an expanding diagonal. Most common is the golden pocket 786 or even the 886. Wave 4 did retrace to the 786, and now you want to see price moving down, right? Especially after now you took the high. So you want to see 5 local waves and then a move down, where I now actually have to quickly change this. I literally came out of a business meeting, so I didn't prep the charts. From the low to the high, this is your area of interest, 0.5 to the 786, between 27.6K and 26K. Honestly, probabilities-wise, if price now would drop to the downside and reaches this area, the probabilities are going to significantly increase. You're just going to go through lower prices, because this is such a rare scenario, especially on higher time frames, on top of a running flat. If price moves down, you know, if you go into this area, I think probabilities are going to be very high. You're just going to continue. Of course, I update you guys as I can 3 times a day. So whenever stuff happens, you will be the first ones to know. And now we get to the lower time frame structures. Where we have to go to the bullish scenario. So this is the last, most recent impulse. So. Okay, so in this particular scenario, right, we then have, you could count it also from the low. So this is the question, right? Is this like a 1, 2, 3, 4, and now you're working on 5? This news event thing made Elliott Waves a bit awkward locally. I think the intern, I don't know what the intern is doing now, but I think what was it? They banked some profit, Cointelegraph, or the intern or whatever it was. I think he lost his job. I have no idea. But yeah, locally here you can see the push to the upside, and what is also important is at least the volume. I can't deny that the volume is a little bit disappointing. We do get big pushes though, but yeah, I mean, of course, compared to this week, you know, everything looks small. But even here, you had more volume here than we have at the moment. So you definitely want to see some volume increasing. Actually, let me put a little horizontal line. So there's as much volume in this move down as we now have in the move towards the upside. And actually we had moves here to the upside which had higher volume as well. So, and don't forget, we're not talking about a wave 3 of 3. 1 2 1 2 3. This is the wave where you want to see boom, you want to see the volume, you want to see the kick, you want to see the big candles. This is where you want to see the volume, right? This is where the moves are made. This is where the profit is made. But where's the volume? Which also then comes on top of, we have a running flat, a double 1-2 which doesn't look great, expanding like diagonal, leading diagonal, which is incredibly rare. Where's the volume as well, right? So it just like makes you think. And it's not that I'm bearish, I'm not bullish and nor bearish, right? But from an Elliott Wave perspective, price is important, time is important, volume is incredibly important as well, because that's what you want to see in a wave 3. Now, potentially the volume will come, and this is something that I think if price continues up, I think the volume will come once we get close and break 31K, because that's where the FOMO comes in. And the volume is also is of course related to psychology, right? In the end, people have to click the buy button. They might not yet be convinced, like, oh, we had a big move down, we're going to the upside. If there is going to be volume, it might come the moment you break the high, because that is the moment where the people are like, fuck, you know, I'm missing out. Boom, 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 boom. They're going to be buying, you know. So, but at the moment, just, yeah, I mean, don't like leave this new spike behind for now, though, as that's a bit of an anomaly, I suppose. But if you just look on average, I think the average candle height over here is quite disappointing, no? Compared to everything that we have over here, which is just, it's interesting, I suppose. So that is at least something we have to keep in mind when during this move to the upside. But what is important locally is that as price moves up, you do have volume to the upside, and that is what you want to see continuing. Continue the move to the upside. Now the weekend is coming, and weekend usually equals a range. So if we have a wave 1, WXY in wave 2 for the Elliott waivers over here, people that want more info. Zigzag, zigzag, flat, WXY, where then you get a move to the upside in a sideways double combo. Wave W and wave Y are not allowed to have the same structure. Wave W can be a zigzag flat, wave Y can be a zigzag flat or triangle. Wave X can be any corrective structure. So if W is a zigzag, wave Y has to be a flat. That being said, this is then your low on the golden pocket, common target for a wave 2. You're going to be moving towards the upside for new highs. And then we can take a trend-based fib from the low of 1 to the high of 1 to the end of wave 2, toggle on the wave 3 targets, drag them to the right side, and you can see that currently we are at the 1.618, which is usually a minimum target for wave 3. Because wave 3 tends to be the strongest wave in an impulsive structure between 1, 3, and wave 5. So we hit the 1.618, very nice, almost a 2. Now, if price, like we are in a wave 3, so you can still then expect 4, maybe over the weekend, and a wave 5. That's what I'm thinking at the moment, is that the weekend is approaching. So I think that, looking at the weekend, let me have a quick look. 1, 2... yes, might be like a 1 2 1 2 3 4 5 4 5, which then means we might go a bit higher. So we get this as a 3, then you get a bigger 4 and a 5, which then means in the weekend you are going to be ranging with wave 4s and 5s, which is a ranging structure, because that's most common in a weekend. So it would match nicely with the end of a potential like either sub-degree wave 3 of the green 3 and then range somewhere here. Potential if you break this target and you break the 2, then I look for the 2.618. If you break this, then you can look for the 3.618, which of course then moves you to 32K, because then the high is taken. So let's patiently wait and see how this move goes, because once again, right, you want to see big pushes. Okay. And for the people that joined a little late, but want to get some extra info, little nugget over here, little golden nugget, I suppose. This is very interesting, by the way. This area is a single print area. It's an area where there's basically no volume. Price was here for a very, very short amount of time. And you will sometimes see this inside candlesticks as well. You can hit it once, often acts as at least support or resistance for a first hit, which can be traded. But then the moment you come back and you start to enter for a second time, that's the moment the probabilities are very high. You're gonna fill the inefficiency. Now this is with a wick, but you can also have the same, and I used this example at the very beginning, so sorry for the repetition for the people that are here already. We go into the bearish cycle scenario in a second. You also had it here. Big inefficiency, but what does price do? Right, on the 5 minute, it hits it once, you get a bounce. But second time around, you do not come back inside and below this area. Only when you go below here, probabilities were very high to then fill the whole thing. And that's like, it's tradable, right? It's some good information to have. It happens quite a lot on the chart. You will see it quite a lot. So, yeah. Okay. Those were all the bullish scenarios. Let me actually put this in my folder. Micro bull. Why not? While we're doing the stream. Chaka chaka. Now we go to the bearish Elliott Wave scenarios. We're going to start on the cycle chart. So give me a little bit of time setting it up. Boom, boom, boom. And then we get to the bear. Okay, there we go. Very, very interesting. I hope you guys are doing good. I know that I'm not really chatting with chat at the moment, but I will go through the chat in a second and reply to you guys. But let's first go through the content. So also the VOD viewers, you know, they can watch in one go, I suppose. And then we start chatting and having fun. Diego, welcome to Bronze. Thanks for your support, man. Good to see you after all the messages as well. Thanks for popping in with the Bronze. Thanks, man. Thanks for the support. Okay, let's start. The bearish scenario on the cycle, right? 1, 2, 3, 4, 5. 5-wave structure. I do know on the index we have a bit of a 1, 2 over here still, right? But you know, Bitstamp chart, where this is the high, you're going to be looking for a bigger bear market, right? So the move here doesn't really matter and change the higher like cycle bearish scenario. So we then have 1, 2, 3, 4, 5, right? We have a structure which ends over here. And you're going to be looking for at least a 3-waver to the downside. Now, when you take fibs from the low to the high over here, again, most commonly a wave 2 retraces to the 0.5 to the 786, which is $400 to $23. Now, like we all know, that is incredibly unlikely. And that is where also information that we get from these lows comes in. Because what you can see is this first low here retraced to the 0.236. Didn't even get close to the common targets. The thing is that these are common targets on like daily and lower time frames, basically, right? Once you get to the cycle, things change a little. So for the bearish scenario, I do not expect this low to be taken, sitting at 3K. The 2.36, the 236 will be my like max target based on Elliott waves. But we have even just above the 0.236 incredible support, which I will show you in a second. So in this scenario, 5-wave move up, expecting a multi-year bear market, which I mean, it already started in 2021. So we're already going for basically then 2 years, and you then expect a continuation for another couple of years. Before then you make the low and then you move up. Where this move to the upside is an ABC. Remember the ABC that I showed you on the daily time frame? That is where this cycle scenario comes in. The 0.236 is sitting at 6K, and then you expect a move to the upside, where if we look at time, you can see again, I got the 0.236 and the 382 on the chart taken from the low to the high over here, where if we look at the 0.382, you know, based on what we see as well over here, retracements can end before the 0.382. right? So that would mean it can easily end here. It happened once, can happen again, right? And also here. So we got to keep in mind that a retracement wave 2 on such a high time frame can end between the 0.236 and the 0.382 fib time, which is between April 24 and September 25. And that is interesting because September-October 25 can also be the high of the bull market. So, hey, very, very interesting, though. So, yeah, this is the bearish scenario. One more thing is that wave 5 over here reached the 1.618 very nicely from the high to the low of this wave 4, which is a common target for a wave 5. Now we're going to zoom in to the macro. So let me go back to my other chart. We're going to go to the weekly. And I also think that I very quickly actually might need to check my phone because someone is calling me. And I know why, because I actually have an interview for Dutch media. My background is the gaming and esports industry for 17 years, for the new ones here. I used to be a pro gamer. I'm in the media a lot, interviews, new like TV, that sort of stuff. And I actually have an interview now. But, you know, they can call anytime. Let me quickly send, if you allow me, let me quickly send this guy a email. Just very, very quickly that I am live on YouTube and that is you guys are my priority. So one second. Hi, Erwin. Okay, there we go. Hey, come on, give me props, you know? Priorities straight. Okay, I send him an email. Business goes, you know, I'm live on stream, but of course people call me, Dutch media is calling me, trying with the interview, which is about how games teach you skills that you can use at work. That's the interview I have for Dutch media today, which is very interesting. Anyway, that's not what we're talking about. So where's my folder? Here. We go to the macro bearish scenario. So we're zooming in, right? Just like with the bullish scenarios, we're zooming in, but now we have all the bearish scenarios coming by, which is this one. So in this particular scenario, we also have, again, a 5-wave structure finished, right? It's simply the sub-degree count. That's very, very nice. By the way, little giggle, the COVID low. You know, people call it a COVID dump. I call it a beautiful wave 2 going to the point of control. But hey, 1, 2, 3, 4, 5, high 69K, but now you're looking for a 3-wave structure. I don't care if it's an ABC or a WXY, but you can't end something here, right? And the targets for a wave B for me are the same anyway. It's just a wave down that matters the most. It's either a 3-wave or it's an impulse, right? In a wave Y or a C, but it doesn't change the resistance and support areas. It doesn't change the sub-degree count that I'm looking for. So in this scenario, what you can see is we are looking for a 3-wave structure to the downside, right? Where this wave B in yellow has very important resistance between the golden pocket and the 786. And you're going to see great confluence with what I mentioned earlier on the daily time frame with the bullish scenario in an ABC. Reason being, the golden pocket has important confluence with the point of control of this, what is this, multi-year volume profile at 39 to 40K, which is a target area for a wave C in a potential ABC. Interesting. And then around here, the 786 is important resistance because it's in confluence with the value area high. And in range trading, the moment you enter the range, which in this case is the value area low over here, which you are now attempting to enter once again, once we can get inside, maybe retest, because the retest here failed once, twice, but now we're already testing for the 3rd time. If you move up, maybe you can get the test again and you move up. Probabilities are quite high to go to the other side of the range, but the point of control is always going to be a take profit 1, range trading wise, right? Where you simply trade the range until it breaks. Point of control, 3940K, incredibly important area. And then you have 50K over here, 48, 50K for the 786 area and the value area high. So very important. You also see over here the simple support resistance flip area, support, bit of a range, resistance, resistance. If you can clear this, of course, you just go to this resistance area really, where you're then looking for a wave C. And then you tumble to the downside, where the most common target for both the wave Y and the wave C is usually the 1 to the 1.236, taken from the high to the low of A to an expected high of wave B, where the common target will be in confluence with the golden pocket, taken from the low to the high, right? As well as the value area high of this multi-year volume profile. So that is incredible support, especially because the golden pocket and the value area high are both at like 9, 10K, but the area in general is like 11 to 8K, right? That's going to be your main area of interest in this bearish scenario. If we then zoom in to the daily, then we remove this and we go to the high time frame. We turn log off again, right? Because we're going to the daily, we do this. And in this scenario, what's important is that now the high of A or 1 is changed. Just have a quick look. This is the bearish scenario, by the way. This is the bearish scenario. This is the bullish scenario, you see. It changed. And there's an important reason for that change, which has to do with the corrective structures, which might go a bit too deep, I'm not sure. But yeah. Let's first talk about this scenario. I can always do the education in a bit. But here we have then a wave A, wave 1. And we're looking for a zigzag to the downside in an ABC. Most common target for a wave 2. And also still common for a B, because the wave B common target is the 382 to the 886. It's very wide range. 05 to 786, especially for a wave 2, which is between 23.67K and 18.9K. So you could retrace to 19K and still be very bullish. But just imagine the fear that's going to be happening if you take this low or if you move down below 20K. And that would be great fuel for a new push to the upside, no? So in this scenario, you're looking for a zigzag move down before continuation up. The reason A or 1, I am going to say it, the reason A or 1 is here and not here is because if you're looking for a WXY, because wave W is already a zigzag, wave Y is not allowed to be a zigzag in a sideways double combo. It has to be a flat structure then, right? A, B, C. That would be absolutely amazing if this happens. But time-wise, it's a bit of a thing because wave W is then quite short to a very, very big wave Y. So, time-wise, it doesn't have the biggest probabilities, but it would be absolutely amazing. It makes me giggle if that happens. Wow, just imagine. So, yeah, that is why moving it to the high over here, you get a simple structure. Wave 2 tends to be simple, short, and deep. Those are the characteristics for a wave 2 most commonly because it's probabilities. And a wave 4 tends to be shallow, complex, and longer. If wave 2, however, is shallow, complex, and long, wave 4 can still be shallow, complex, and long, but can also more commonly become sharp, deep, and short. It's called the rule of alternation in Elliott waves. So, is it a common structure? I mean, a zigzag is very common in a wave 2. Yes, absolutely. It's the most common structure in a wave 2, a zigzag on average, which you will also, by the way, see in the statistics over here. In the Elliott waves, Discord and then Elliott waves over here. If you download this, this guy is really good with, it's a big document, but it's interesting to read about it. And also this one, by the way, just, why not educate yourself at the same time? So this is like the bearish scenario. But the bearish scenario, as you can see, is still going to be bullish because you still expect price moving up. This is important because this being an ABC, this is still, the bearish scenario is still bullish. Probability-wise, there's a very low probability that this is a three-wave structure. This is a wave 1, 2, and continuation down in a wave 3 to the downside. And I think I removed my analysis, but it wasn't too long ago that I actually spoke about this in a video. It might be one of the more recent videos. The problem here is that this ABC, this wave C, is 3 times longer than wave A, which invalidates a wave C in an ABC expanding flat. Because wave C is actually not allowed to be 3 times longer than a wave A. So yeah, that's one main reason for the invalidation of that scenario. But I don't have it in my folders anymore. Of course, in a zigzag, you expect an ABC, and depending on the move down, okay, but it's just very low probabilities. Much higher probabilities, you're going to at least visit 31K, if not higher, in a macro bearish scenario to then go down. Right? I will get into the questions in a second. Okay, this is then the bearish scenario. You can also see here, by the way, that in the bearish scenario, the 382 now has been passed, taken from the low to the high. So any low after would be nice time-wise as well. So now we're going to zoom in to the corrective structure here, which is this one. So now we are going to zoom in. Yeah. We are going to zoom in. We go through everything, even bearish locally. Okay. Now, just for your perspective, we just did the bullish scenarios, right? Earlier, where we spoke about a running flat, double 1-2, or expanding diagonal, move towards the upside, right? Now, this is a zigzag, and a zigzag is a very common structure. For a wave B in a zigzag, the 382 to the 886 is a common target, which is all the way up to 31.1K. Probability-wise, if it goes to the 886, I mean, you're so close, but it's just good to know. So we have an AB wave C to the downside. Wave B has to be a 3-wave structure, which of course becomes a little bit more difficult with this push to the upside. But then you're going to be counting this as a WXY. Oh, I'll get there in a second, by the way. I shouldn't go too fast. So after a wave B, we expect a move to the downside, where wave C is currently between 23.5K and 21.9K, where also at the lower edge of this box, around 22.5, 21.9, I have some additional resistance. Now, what is also important here, which we should not forget, which is it's not necessarily Elliott Waves related, but it is very important, is we have a double bottom at 24,750, which is like a magnet for price. Is it a magnet for price and can it be left alone? Yes. However, Bybit, and maybe some other charts, but most of the charts have not yet taken this low. But Bybit, I know, has a low here to 23.6K. And most commonly, these type of long wicks get filled, and it's all probabilities, right? Probability-wise, these bigger wicks tend to get filled. Also probability-wise, the moment a other chart takes an important or high time frame, I should say, high or low, probabilities are higher that other charts will follow. But as you can see on my chart, the low has not been taken. This wick has now been filled, which is common based on probabilities. If we go to the Bybit chart, and I know I've shown this in a few streams. In the Bybit chart over here, first of all, Bybit has not filled the wick. I know 30.6K I think is the high. Yeah, so 30.6K, what's the fib? 30.6K is like the 786 area, which is still a common target for a B. But just for, statistics purposes, I suppose, you can see the big wick. So over here, wick got filled. We do a little bit of research. Wick over here. Wick got filled, right? Actually, let me get rid of the brush and just zoom in like this. Over here, wick, 3-wave move, down. We continue our journey. Wick, down, wick, eventually filled. And you can just keep doing this. And you can build statistics on this as well. Here a wick, another move, and down. And it just repeats. Wick, gets filled later. This wick over here already filled this wick. This wick got filled almost like most of it, I suppose. But you can do this countless of times, and you will see that probability-wise, the probabilities are higher for a wick to eventually get filled, which is not the case here, which is interesting because I'm going to try to sum it up and summarize sometimes during the video, is we have in a bullish scenario a running flat followed by an expanding diagonal, which is incredibly rare. So you have running flat is very rare, expanding diagonal very rare, or a double 1-2 where there's lower degree wave 1 and 2, longer in price for wave 1 and longer in time and price in wave 2, doesn't look too nice, right? And you have a double bottom at 24/7, and you have the damn wick that's not yet filled, which also take the low. So if this pushes, you know, of course it can, but it's not nice Elliott waves, you know. It's rare on rare, which can happen, of course. It, you know, playing with probabilities, but you know, I don't know what's going to happen. We might go to 40k, we might dump to 20k. It's just about at least giving you the information from a neutral perspective, bull and bear, with the probabilities. And from Elliott, I mentioned at the beginning, I'm going to be very transparent with the probabilities, because this is Elliott Wave's probabilities with the different scenarios, right? Now, if we then zoom in to this structure over here, we are here looking for WXY. The problem with this WXY though now, it starts to become very difficult to count this as a nice corrective structure in a WXY. But a WXY-XZ is very rare, which is therefore also not preferred. But we are still around the target area of a zigzag in wave Y, which is the 1 to the 1.236, and a rare target for wave C, and then an ABC for wave Y is a little bit higher still. But then you have a flat wave W, X, double zigzag, Y, ABC, 1, 2, 3, 4, and potentially you're going to end your wave 5 and then move down. What I think would be very interesting is to take this high. I should say these highs. Maybe even right there. Because there's a lot of liquidity. 1 high, 2 high, 3 high, 4 high, right? There's 4 highs. Let's see. We just took this one, as you can see. We wicked this high. Swing failure pattern, price finding a little bit of resistance, moving down now. There's still a little bit of liquidity here. And you also have a bit of an inefficiency here, which is interesting as well in Confluence. So 30.4k on my chart, and then Bybit might like fill the wick as well, is interesting. We took them on other charts. I do see that in the corner of my eye. So let me then have a quick little look. Yeah, so Bybit of course went here to 30.6, so that's correct. Let me go to Bitstamp, which did not take it. Let me go to Binance. Oh wow, Binance, that's a nice one. Bybit actually wicked those highs already way earlier. And then we have the index chart, which did not yet hit it. So I think it will be interesting for price to maybe wick this and then observe the reaction there, which is almost like a little bit of like a last... the Binance chart is not correct. Yeah, I don't know. I don't trade on Binance or use the chart for analysis, but... yeah, I will find another one. But then WX and then a zigzag in Y, but also this Y is now is becoming very big in time compared to W. So, you know, again, I just came out of a business meeting. I started the stream. I didn't really necessarily have too much time to go through everything. But we had over here W, X, and then a zigzag in wave Y. Let's look at the time, by the way, while we're at it anyway. Let's toggle on the one. Oh, it's actually very nice. What am I saying? So for a wave Y, the 1 to the 1.618 is absolutely a fine target compared to a wave W. We even still have some more time left as well, now that I see. So yeah, okay, no problem, nothing said. But what would be interesting though is you know, you have a little bit of liquidity, but at least we took the high here, and we see a little bit of a reaction. We're going to wait and see how that's going to work itself out. Let's zoom in to then the... I suppose, well, this is something that, of course, I did not prepare because my bearish micro bear initial one is here invalidated. Then we have this one, which is also invalidated. So basically the bullish scenario is also the bearish scenario. Ooh. where your 5 waves have to be finished, or you're going to be looking for a 1, 2, 3, 4, 5 wick and then down. So let me quickly put this on the chart. I'm counting in my head at the same time. 3, weekend, move up. Weekend is ranging, range. Wave 5, you move up, you wick all the highs in the liquidity because people are going to be buying. Everyone that is working is free in the weekend. They're going to be like, oh shit, we're at 30k, buy. You wick the highs on Monday or whatever, and then you move towards the downside. So this is the bearish scenario though, with then internally more like a 1, 2, 3, 4, 5, or may not be completely finished, but that's details. Because we did hit the 1.618, taken, let's see, from the low to the high. A little bit of live analysis, everyone, because of course I just came out of my business meeting. So we hit so what's nice, you hit the 1.618, but you went to the 2. The 1.618 can be a weekend range area for then a move up to hit the 2.618, because the moment you like pass the 1.618 and you go to 2, probabilities are quite high. You go to the 2.618. So that would fit nicely with a potential weekend range for then a wave 5 and a move down in the bearish scenario. So please watch out over here. Trade safe. Don't YOLO, FOMO, catch knives. Have a plan, have a strategy. If you're buying and you look for highs, you look for highs, right? But make sure you trade safe. Don't FOMO money. You can trade at 50k, you can trade at 10k. It's about the move individually. Of course, for the long-term investor, it might be a bit different because they look for long-term gains. But then, long-term gains also means you gotta have dips. So whatever you do, trade safe. Now this is then a bearish scenario, so we call it micro bear. At the same time, doing a bit of analysis here. The single prints have played out. So what I would look for locally is a range to form over the weekend, potential wave 4. If price then moves up and we take the highs here potentially, right, that's at least an interesting area. Then I look at the reaction, which I can recommend anyone, is, as mentioned, no FOMO, YOLO, catching knives, but we look at the reaction. And this means you got to have a certain tools or something that you look at, which can be market structure, candlestick patterns, CVD, RSI, stochastic, moving averages, whatever it is, right? That you're going to be looking for to make sure that if you enter potential shorts or longs over here, right? I mean, we had bull CVD over here, for example, and then during this move to the upside, we crossed the point of control. Just as an example, I think this is important, where when trading, you had here a move towards the upside. Let me actually show this, where, holy moly, Discord is on fire, all the tags. Just to show you how I observed this move to the upside, right? Over here, I was sharing stuff. So I said retest of the point of control. Looks like it wanted to break once more because we retested the point of control. Up, retest. With a red candle. This is an order block in white, 1 hour order block. I was like, yeah, it might take this local high over here. Now then took the high, moving above the order block now, and I can imagine it will take the local high. And the local high was this one here at 29k. So price was here, rejecting at the order block. I said, if price moves above, I'd be looking for the high, And then Elliott Wave wise, it wasn't a nice double zigzag anymore, which increases the probabilities that instead of a corrective structure, this was going to be a more bullish structure. And then in combination with price eventually moving above the order block, building over here bullish CVD as well, and more locally, and also here, probabilities increase for a move to the upside. The Discord link is in the description. I just see it in the corner of my eye. So, and now then we arrived at the next resistance, and then it's the same. What happens at resistance? And in the morning video, that's what I covered in the video this morning, is we look at the reaction at resistance. So I said, and we could see higher lows in price, lower lows on the yellow and the blue CVD. By the way, for people that don't use CVD, first of all, I have a video on YouTube which is free. It's all just public. I have a one-pager for you as well, explaining CVD. I over here have the website, my template. Even Dario is so kind to also make an Ethereum and Solana template. You can download the template over here with the steps to follow to put it in. So then you get here. High low price, lower low on CVD. Absorption going on of market shorts. Price has a little bit of a move down, but look at the yellow line. With this little range, 5 minute, higher low in price, lower low on the CVD. In a bullish market structure, which is strong with volume increasing as well, using ranges on the left can be possible. So they have higher low in price, lower low on the CVD, probabilities of price moving up. But even if that didn't work out, then more locally, over here, higher lows, lower lows, right? Probabilities increase for price to move up. And then you get the knowledge of, you move inside the single prints for a second time, first, second, higher probabilities you're going to break it, and you're going to fill the single prints. And filling the single prints means you're going to go to the high, which is literally where we rejected at the moment. So this is how the story unfolds, right? This is how I then look at the chart, and this is what I mean with looking at the reaction. I don't want to catch the knife and go short here because I see a wick. I want to wait patiently. And look, I have a personal trading strategy as well, right? That is fully with rules and everything. It will take hours before I even enter a position. But just by looking at the chart and observing information while it's happening, I don't want to get in immediately. I want to make a, like, how do you call it? Like a blah, blah based decision, a, argument based decision or whatever it is. And then I do whatever I want to do. Over here, we're rejecting, but it's, for me, it's way too short to call what is happening, right? Besides, we're close to 30.4K. So in this stream, we went over cycle all the way down to the 50-minute time frames, both bullish and bearish. I've explained informed decision. Thank you, Booba Cheeks. Yeah, that one. So we went through all the time frames, cycle all the way to the 15-minute, and explain to you why certain probabilities on certain scenarios while talking are higher than lower based on the pattern, based on what we are seeing on the chart. So, if it went too quick, make sure you just review the video because it will be on YouTube. I think I might actually put this one in the cycle folder, this stream. Because I think it's everything in one at the moment, so that's nice. And make sure you trade safe. So yeah, this is everything that I kind of had to say. So let me actually go into chat while we keep an eye on what's happening here. Of course, let's. Would like to ask that what is the invalidation of this impulsive structure? Well, if we are looking for this to be, where is it? My bullish. Oh, wait, that's the bull in the bearish scenario. So for a wave 4, you don't want to see price moving below the 0.5. Good question, by the way. So, oh, not there. Where is it? Wave 4 with an extended 3. Also important for the weekend range, of course, that we might get. So my invalidation is here. At the moment, for this to be a wave 4. Of course, after a wave 5 is in, we have to wait and see. But for now, this being still wave 3 price action, you don't want to see candles closing down here and move to the 0.618. Else this could still be some sort of a 3-waver. Doesn't have high probabilities at the moment. It looks much better to have a wave 4 range weekend, grab all the highs in the bearish scenario, right? And then move down. But currently the invalidation with the info we have would be price dropping here. You still have support here, right? Bit of a range. Actually, it might be interesting. Let's see what's happening here. Oh, 3 minute. Oh, we might just fill. Okay. Now, would you look at that? We spoke about. So what you want to do is when you look for single print areas, right, or little gaps, you want to go to the first red candle like this after a big push, right? So you can see it's acting as resistance, support. first touch can be traded. That's scalping. It's really, if you're a scalper, it's a very interesting strategy, I can imagine. For a day trader, it's not as interesting, depending on the time frame of the inefficiency. But yeah, you don't really want to see, for everyone, you don't really want to see price moving down here. 28,940. So I do have quite some scrolling to do, which I'll do in a very quick manner. But Jean Lamour, I love your name, Jean Lamour. Very French. My mom is French, from Paris. Is there a video you explain all your presets for tools like Wave 2 and Fib? Do you explain somewhere your call? Okay, so Jean Lamour, what I can recommend first, because first of all, I can't share the presets. Because it's not possible, just because it's TradingView templates. But if you go to this website, which is the second link in the description, it's the Elliott Wave detailed link. You get to this website where you can see kind of what I have. You see, they use different colors. Just read through the intro, but you can see what's common, what's less common, what is rare, what is invalidation. This website is amazing for the targets, and most of my fibs are based on this website, together with, here and there a little bit of extra knowledge. But most of what you're looking for is here, because they really very, very nicely explain what the targets are, common, less common. So that could be your base for your fibs that you then can make yourself. I do have a video in the YouTube Gold member section where I go through all the different fibs. Of course, if you want to watch that, but in the end, I can't give the template because you can't. So everyone has to still do it themselves, where I can definitely recommend this website, which is very, very, very good in my opinion. So let me quickly go up. I went over the probabilities. I saw a quick probability section. So in everything I just spoke about, especially for people that just joined, make sure you go to the beginning, because we went through cycle. Wait, let me actually write that here. How can I say this? In the stream, we went through all time frames from cycle, Elliott Wave analysis to local 50-min. If you just joined and missed it, please go to the... Yeah, there we go. And then what I do is not click these damn emotes. I really dislike the fact that out of nowhere I got this heart. Like, what do you expect me to do? Like, how can I now? Like, I didn't have these emotes. I also don't know how I can turn them off or on, or like, am I gonna give myself, like, you know what I mean? Can someone write something for a second? I'm struggling here. I'm having a luxury problem. I want to wait. No, I can't do right mouse click as well. There we go. Pin message. Ta-da! Jeez. There we go. We fixed it. That's how we do. Valorant chill music. Thank you very much. Okay, let me quickly have a look at what's been going on over here. Jabunga might dump indeed, possible. We took the high. Justin Chu. Oh yeah, that's where we were. On the 1 hour, it looks like a Swift failure pattern. Absolutely. So yeah. Justin, let's go live. What's the highest probability? Well, if we look at Elliott Waves. Oh, wait. We are not... Wait, I want to show this as well. We can at least put a little notification here, I suppose. So based on Elliott Waves information over here, more locally, the bullish scenario is a running flat expanding diagonal, or a double 1-2. Expanding diagonal is very flat, or wait, a running flat is very rare. Expanding diagonal is very rare. Rare on top of rare is extremely rare. Then you have a running flat being rare with a double 1-2, where wave 1 is longer than the higher degree wave 1. Wave 2 is longer in price and time than the higher degree wave 2. Doesn't look nice, right? So it's not really great for the probabilities. In a bearish scenario, you're going to be looking for a zigzag. You still didn't take this low on most charts, except Bybit, which still has a big wick, which usually based on probability fails. You have a double bottom over here as well. So look, I'm not bearish, I'm not bullish. I mentioned what I look for locally, right? Also with the highs over here to take the liquidity and then observe the reaction, right? I take it level by level, I take it step by step. But from an Elliott Wave point of view, probabilities are not really in favor of a bullish scenario. Just because of it, a running flat is so rare, and they have a double 1-2, which looks awkward. Yeah, it's not that I don't care if price goes up or down, but just from an Elliott Wave point of view, it's something we have to keep in mind. But I prefer now, because Bitcoin here is in a zone where for me it's like from Elliott Waves, like this zone here is incredibly important, because this zone will decide, because we are now at an area of interest for the bearish scenario where you can finish a WXY corrective structure here in this area. But you're also in the area where if you continue, you have the bullish scenario, right? So it's just a very, very important area on the chart at the moment that price is at. And first of all, I'm not a financial advisor. I don't know what's going on with price, right? I don't know what's going to happen, but just an Elliott Wave analysis and the probabilities, sometimes lower probability scenarios do play out. We see it sometimes. So it's not like it never happens. But I prefer to now, so we've done the higher time frame analysis. I prefer to now keep a close eye on what's happening locally, because for me, that is going to decide down or up. What is happening here is the most important thing at the moment. Because you want to see local signs of breaking down, or you want to see more local signs of continuing, right? That's what it's currently all about. So yeah, very interesting indeed. Did I actually remove the... Yeah, I think so. Okay. Eric. The reason I joined the channel is because I want to learn in depth of Elliott Waves. Mr. Justin Chu, newest member here as well. Welcome, man. Thanks for joining. Really appreciate it. Also, Diego, for your bronze. Thanks. Really appreciate it, guys. And... yeah, you're gonna have lots of content as well about Elliott Waves. So appreciate, mate. I will get you gold in Discord, and send me a mail as well with your Discord, YouTube, Telegram, usernames, so I can get you in everywhere. Use the like button. Music composite for piano. I love piano, by the way. So welcome. George, top bottom, yep, cycle, we've done indeed, sir. Yo, X, are you like RVV now, or did I miss it again? Damn, I don't know who X is. I changed the name. Did we just hit the 1.618 of the first 1-2 of the bigger 1-2? I mean, low to high to low. Yes, we did. That is absolutely correct. But look, and this is a bit of the thing, right? Where now your higher degree 1 or your lower degree 1-2 even has a 1.618 that's higher. So your higher degree 1-2, so this is 1-2-1-2, right? Your highest degree 1-2 has a lower 1.618 than your lower degree 1-2. You see what I'm struggling with the double 1-2 scenario? I don't know. It's just an awkward Elliott Wave composition, I suppose. I'm trading based on market maker perceptions. And when I look at Elliott Waves, I want to learn more. Yeah, the reason I wanted to learn Elliott Waves, first of all, I love psychology, and Elliott Waves is built on psychology. But I want to be able to read price like a book. Like I want to look at the chart and my, like I cannot do not Elliott Waves anymore. Like the moment I see a new chart or any chart, I immediately start counting because I'm trying to read where price is in the context just to get probabilities of the trend and direction. And I think that Elliott Waves is one of those scenarios that can really, or strategies that can really give you a very good read on the market. But it is just so much to learn, and that is where most people fail. They don't want to put in all the time to learn Elliott Waves, which usually takes years before you get to this, you know, to the Elliott Waves, mastering Elliott Waves. Like myself, it took a very long time. I started trading January 2021. I started learning Elliott Waves in February 2021. So that is now 2 years and 9 months of Elliott Waves. And it goes with ups and downs. I quit Elliott Waves for like 2 months sometimes, and then I go back in and I find something new, and I'm like, wow, and now it makes sense, and then it doesn't. And but nowadays, you know, now I'm at a level where yeah, you can like read the market in some way, I suppose. Like all the info is now stored. And actually the YouTube channel also helps because the YouTube channel is constant repetition, right? Oh, you can't actually see the whole message. Well, people can click, right? Another 2:30. Oh, by the way, let's check news next week. Okay, Thursday we have like some news. This is Central European time, and in 2 weeks we have more news. Okay, well, it can be interesting as well, getting some news in for volatility. Ishimoku, Bollinger Band, yeah, the Bollinger Band, I think it was as well. Ishimoku as well, Ishimoku Cloud. Ah, okay, it is Raymond. There you go. I gotcha. RVV. It's too complex. Yeah, I know. Elliott Waves in a nutshell, man. But the thing in the videos, I try to educate while also providing an update so that people can learn and watch. In my regular videos for new viewers here, I basically go through different scenarios of different time frames, usually one bullish and one bearish per time frame. And then at the end of my video, you see the probability section where I talk about, okay, what scenario based on Elliott Waves has currently the highest probability per time frame. So, you know, making it a bit easy at the end, I suppose. But I do the in-depth, like this pull, this retracement, this and that, because it's important to understand why the probabilities are the way they are. You know, because the probabilities are based on all the retracement, the pulls, and Mondo Tough. I will jump into Discord while when I go through the chat, because I got many notifications I noticed, so I'll check them out. 115 around, yeah, that could be correct. So I will check it out, but 115 to 180 is around the same areas that I am looking for in the bullish scenario. When wave 3s happen? No, so it's a buildup of 1-2s. Each one is a lower degree, and then eventually you get a big 3. So what then happens is you have 1, 2. So usually on lower degrees, not cycle degree, you have a 1, 2, 1, 2, 1, 2. 2, 3, 4. You get a build-up, usually bullish CVD as well, and then you get boom, the big wave 3. That is what then. And then that's quite funny always. So price action in a nutshell with a very bullish like wave 3 market structure. You have a 1, 2, 1, 2, 1, 2, creating a bit of a contracting diagonal. You get a big 3, and then you get a 4, 5, 4, 5, 4, 5. Which then. So the moment you see this, a big push, the moment you start ranging, you got to be thinking, okay, we might get like ranging like this, of course, in the same degree, right? I'm not talking about the very small ranges that you get during the move up. It should be in the same time frame, the same degree. But the moment you start to see this, you got to think, okay, we might be in like 4, 5, 4, 5. So I just want to do this quickly. There we go. is a yeah, exactly. That is the wait, and the move from right now can be a wave Y. 69 to 32 is a W. 32 to 48 is an X, and the move right now can be a wave Y. W, X. Yeah, the problem with your X, that sounds weird, is you know, for a wave X, preferably this is your high, and then an A, B, C flat in X, and A, B, C, D, E. It's definitely not a scenario. So wave X retraced to the, I think, 382, which is like a minimum target. It's not a, it's an, I do like the scenario. Wave Y is allowed to be a triangle. So then you're going to be doing this here. Oh, it actually didn't hit the 382. Let's check quickly. Oh, it did hit the 382 on lock. Yeah, there you go. So I was correct. Yeah, the 382 has been hit. And then you have to find a triangle. And yeah, in a triangle, all the waves should be zigzags. Or wave E can be a triangle, and C and D can be more complex in a double or triple zigzag than usually. But it's way too early to call. And also for a triangle, look at the size of W, look at your little size of Y. If we look at a big triangle, then preferably I want to see this. Right? I want to see a bigger range because of the, like, 69 to 32, and then your triangle now is going to be this, which is too small, if you know what I mean. The 0.5 is a target for a wave 2. And the 0.618 to 786 is. Oh, you talk about the cycle probably. So in a double 1-2 scenario, preferably each wave is shorter, and the 0.5 is a target, absolutely. So with the blue cycle count, you could have a 0.5 adding to the oh. .5 is sitting at 73k. But just because of this being a 786 and this is a 618, I prefer to now use these first instead of the 05 already. I first want to observe what happens locally with the structure before I would put an 05 on the chart at the moment. But it's absolutely possible for a wave 1. I see you're bulging when BTC goes up, but what do you think is the lowest Bitcoin can achieve? Well, the lowest at the moment would be 6k for me, as explained in the cycle scenario. All good, Raymond. Just to double confirm, is it accepted back below 29.48 considered bearish right now? I think I kind of went over, it was the same question as I went over just now, right? So 29.4 is still fine. It's a problem would be reaching the golden pocket now. That would be considered bearish, which is 28.9. You don't want to reach 28.9, right? In the, wait, I must have this in my folder. I don't know, I didn't save it, it seems. So from the low to the high, these are your wave 4 targets. And then this here, that's your invalidation up, and boom. Maybe I put it in the wrong folder. No. 0.382 nicely respected, but it's in confluence with the range, filled the gap. Good. Highest probability. Well, I don't really understand the question, but I went over the probabilities, of course, as I talk. So some of the comments, of course, have been answered later in the video. Oh, Ashley, you do it or I? 1 second. The bell rings. My fiance is getting the bell. She's so kind to me. Interesting with that arc wave 3 Koenz. I have rings that match. Oh, also in Discord. I'll make sure to check it out. Guys, if you're not in Discord, it's like there's so much brain power in Discord. It's ridiculous. I'm learning something every day by just scrolling through what's happening in Discord. It's insane. So much good stuff. And especially like with Liquid Mafia, this guy uses rings. It's like Fibonacci rings. It's incredible. Just look for his messages in Discord. It's very interesting. New joiners can watch from the start if they feel lost. Yes. If the that's correct. If the price went over 31.8, are they still bearish? I just went over this, so that's correct. We do have still bearish counts. No volume in 10 days will drop hard. Yes, that is potential. That's a volume comment I made, of course, in the middle. We want to see that volume. Rand lower, we don't get that before ETF approval, which can then be the acceleration of a wave 3. So you're correct. Ja Louise, good morning, man. What's up? Edward Park as well. What's up? Most stop losses and liquidations above 32K, including yours. Well, I mean, as long as you are risk managed, it's no problem if your stop loss hits. Yeah, because you won't win every trade, but trading is mainly about managing your losses. It's more about managing losses than winning. It's all risk management. So it's no problem to get your stop loss hit, right? As long as in your strategy and your statistics, you know that long term you're profitable with the strategy that you execute. Jean Lamour, man, that's such a great name, eh? The Opslag. Allow Diego, what's up? Yep, there you go. Got the badge, man. Got the badge. Bronze to start with, and then it will become different colors after a couple of, like, after 1 month, I think it turns, not yellow, silver, and then gold. Chess, and then I have like more. No phones, more important opportunity than free show. Yeah. The media wants to talk to me. I know. I will have the interview at 4 p.m. now. This macro bearish scenario is beautiful. So many confluences. Correct. Is it a common structure a zigzag is? In your daily analysis Elliott Wave count for the bearish scenario, couldn't you use the rule of alternation to see if it matches your October 25 all-time high? Couldn't you use the rule of alternation to see if it matches your... Oh, wait, for my daily bearish scenario. Wait, I have to read this again. Yeah, but the bearish scenario won't go to a 2025 all-time high on the daily. The daily bearish scenario is here. And the daily bearish would then be an ABC, but C will never reach a new all-time high. So I'm not sure. Oh wait, I think I know what you mean. If we get this bearish scenario and we are then moving to the downside, do we have enough time to then move up for the all-time high? But the thing with the, I think, look, the 100 to 180K target is based on this being the low. If we make another low, three-wave structure, and then another low, long term it's even more bullish, I suppose. But I mean, it's both bullish, but then you have a wave 1 finish, big 2, and move up in 3. But I didn't calculate the target for the cycle bearish scenario. So if you have a multi-year, more like a longer bear market, and then you move up, I didn't calculate the targets for, you know, where you're going to end up. I'm not sure if I really understand the question, actually. Might need to explain. Yeah, the lower time frame, which of course we did. Yeah, 6K. Like between 11 and 8K, there's very strong support, right? So We back. My alert, bearish scenario still played out. Everything from 26k to now also happened. Very rare structure. It's not been the nicest Elliott Wave structures, which then also leads to the probabilities that I mentioned earlier, right? So let's just keep an eye on what's happening locally. Could be nice for a weekend range, but you don't want to see this move down. We took the high now. But yeah, probabilities, of course, are communicated. We took them on other charts. Oh, this is where we were just now. Market makers like to do all the unexpected. Yeah, correct. I mean, from an Elliott Wave point of view, like also if you look at my, if you go through all the videos on my channel, which I think we already are at like 1,000 videos by now, you'll see that most of the times we're on the correct side. Well, there's one video that I remember, which I made because I apologized in the next one. I made one video where I was completely wrong. Wrong. And then in the next video, I put my phone or my face in front of the camera. I was like, yo, guys, I'm sorry. This was like a few months back already. But usually we're kind of on the right side with the probabilities. But you never know what happens, and that's trading, right? The only thing I can do as someone that has an expertise in Elliott Waves, I try to communicate it as clearly as possible with charts that are very organized, not much clutter, only have on the chart what you have to know. I don't have 5 different counts like on one chart with like a box here of color and a box there and there and there, and then be like, yeah, so today we're going over, and I have no clue what I'm looking at. You know what I mean? So I hope that in like just the style of presenting the waves is organized and clear, structured, so that people can easily, quote unquote, follow difficult information, because Elliott Waves is very complex. And then therefore, as they can understand and follow what I explain in the videos, they then understand where the probabilities come from, so that they can make an, like they have an informed, they just watch the video which really informed them. It's no financial advice, but they could use the information into their own strategy or whatever. But it will never ever be advice, of course. But it's just, I hope that people can easily follow the videos. Check RXP. After the going through chat, I do have to go continue with and I have an interview as well coming. So another time, my man. Discord, that question was answered. In the description is a link. Are we still going up over the weekend? Probably a range throughout the weekend, most commonly. Valorant Chill Music, my pleasure. Good to have you here as well. Booba Cheeks came in with the save. Very nice. Invalidation on the chart. Jean Lamour. Thanks. I'm always... Don't change your name on YouTube, my friend. Jean Lamour. God, that's a sexy name, no? MT, what's up? How you doing, MT? Thanks for your comment recently as well. Always popping in the live streams, as well as Farshak Farouk. Always popping in. What's up? How you doing? Is there a video? Oh yeah, I explained this one. So right now, if price would hit the 618, then it is possible that 29.4 is a major resistance. Well, from Elliott Wave point of view, it's not that 29.4 then becomes a resistance. If you hit this right now, a wave 4 is invalidated in a 1, 2, 3, 4, 5, meaning an impulse to the upside is invalidated and lower prices can be expected. But that doesn't mean you go down straight, because everything, as you can see, moves in waves. So you can hit the range, then still move up and then continue down, right? Because the range itself here is, of course, support. Oh, over here, we actually have the range value area high at 2880. But usually in the weekends tend to be very rangy structures. The 0.5 and the 382 are in confluence with this range. So it could be nice, we're moving down now. Could be nice to then find a bit of support in this area, move back towards the upside, have a bit of a weekend range, whatever is happening. And then maybe wick the highs, and then you go down in the bearish scenario, right? That's in the bearish. But yeah, of course, we went through that in the video as well. Andreas Zahn, Germany, I would guess. It's a guess. Koen, I see your... I answered that question. Wow. How can you pronounce Jaeger? Jaeger Le Couture. Le Couture. Sol or slow? Not today. We went over Bitcoin. It's been quite a stream. How high is the probability that we see 31.8 before 25? I mean, I kind of went over all the probabilities, right? But did I answer this question already just now? I think I did when I zoomed out. From an Elliott Wave's point of view, I mean, wouldn't be. Yeah, we have the Elliott Wave probabilities, and I explained that I look for locally, of course. So currently, from an Elliott Wave point of view, if you look at how price has been developing, probabilities would be higher to move to the downside. But what's most important is keeping an eye on what's happening locally now, because we are in such an important resistance for both the bull and the bearish scenario. So I'm focused on here. But of course, I answered this question during the explanation of the analysis, and then later again when I zoomed out. Phil Das, brother, your detailed analysis is like manna from heaven. Very much appreciated. Thanks, man. Welcome as well. Good to have you around, mate. Welcome. Wait. Yeah. Look, Discord. I know we can see. We'll check that. We could have bearish divergences on the 4-hour and the daily chart. You mean CVD or RSI or any else? No, I don't think. Not on the CVD. Probably RSI or something, I can imagine. What's happening here? Oh. Bearish CVD divergences. Lower high on price, higher high on both blue and yellow, by the way. Lower high, higher high, higher high. And then on yellow once again. So there was some absorption of market longs going on here. Price moving down, and we'll wait and see how this continues. Interesting, eh? Interesting. Love to see it. The struggle was hard. Yeah, I know. I couldn't get to the word or to like putting a pinned comment. I don't know why they do this. Like as if I would use these emotes on my own in my own chat. Like I don't know what this does to the stream. You know what? Yeah. It's indeed having a bit of a move to the downside. Yeah, click it. You know what the button is. Click. What the hell? It's funny. Contrarian, what's up? How you doing, man? Diego, if you love piano. Ludovico Ainardi live. Seen him in Toronto. Another great pianist is Patrick, and then a German surname. I got him in... wait. What's this guy? So he is called Patrick, and then something German surnames. I'm starting up Spotify. It's a bit slower because of the stream, but if I go to my piano folder, which isn't too big, well, this is definitely not my piano folder. Patrick Pitschmann, mate, this guy is great. Like, especially I love the song A New Horizon. You can find it on YouTube as well. Very good, very good. So impressive. Big shorts, depends on your plan. Bitcoin filled to 30-minute SPs, correct. Hey, what's up? How you doing, man? Thanks for all your comments as well, by the way. You should use wave basis fibs. Looks like those fibs don't use percentage calculating. Well, on the log, you just use the log fibs, but the normal Fibonacci's are the ones that you actually use in Elliott Waves. Hasta la vista, Barbie, what's up? But the wave basis fibs, I don't know what it is, actually. So you can use logarithmic for the fibs on the higher time frames. Thanks, rewatch this 2x. Appreciate your time and knowledge. My pleasure. I'm considering YouTube membership too to work a lot on Elliott Waves. Do you have a list of your educational content? If you click on the join button below, you'll find a video where I show what gold contains, and the others, by the way. So silver as well as gold as well as diamond. And yeah, for gold, where is it? So we have many streams. Elliott Wave theory teaching is all the Elliott Wave theory, how to make target boxes, my templates, like how they're organized, fib time, triangles, like the whole thing. Friday feedback is tonight for the golds that are watching, where I give feedback on your charts. It's Friday feedback and Q&A. So I answer questions, I provide feedback, we have fun, we chatting, we watch Bitcoin. It's also a chill stream. Chart of the week, which is about the members are voting, and they vote for a chart that they want me to analyze on Monday during coin coverage, which is here. So I will analyze a chart that they then vote for. But chart of the week on Wednesday is they vote for a new chart of the week. Then they get from Wednesday night to Monday to count the new chart themselves or a piece of the chart. If I say a certain piece, they get the chance to count themselves, to practice their Elliott Waves. And then next week, Wednesday, I review their charts, which they send to me. This was the previous stream. So I then review charts like the one from Will88, but also there's more above here. And I will review the charts and then provide feedback on what I see. And then on coin coverage, that's when I do the analysis myself. So Wednesday is then chart of the week, where they pick a new chart. They get days to do the analysis. Then on Monday, I analyze the chart without, I don't want to be biased, so I actually never really look. And then 2 days later, that's when I review their counts after I have then already counted it. And then diamond is, you can just look at. I'm not a salesperson. I just want to provide value. You can, if people want to become a member, they know where the button is. If people want to sub, they know the button. If they want to like or comment, they know the buttons. Diamond is really about my trading strategy, where I teach them the way I trade with my personal developed strategy, all the rules, one pages, how to create your trading strategy, live trading video, that's that stuff, I suppose. It really goes into how I have organized my way of trading. But Diamond is also very much on creating your strategy and helping you to develop something, which I think is priority. In Discord, so up here, YouTube membership. Volume is low when it touched 29.4. I don't know, it looks a bit like maybe you get a wave 4 zigzag or continuation. Looks a bit impulsive at the moment, no? With the highest volume in wave 3 as well. No? 1, 2, so 1, 2. 1, 2, 3, 4, 5, 4, 5. Yeah, you could almost probably I think they're gonna you're gonna hit the point of control of this range potentially. Thank you. Okay, or the value area high might be a good one as well. The point of control is important. So basically this volume profile is the one that can then act as support. But what simply now happened is now you filled the inefficiency. Look, this is what I explained with inefficiencies, right? Earlier. Once you enter a gap, you tend to fill it. And filling means over here, this little red candle acting as support. It's brilliant, though, for scalpers. It's a great scalping strategy, I suppose. But yeah, now you get a bit of a bounce, and we'll see. But that volume profile is interesting. Just subbed. Although music is my main profession, I love trading. Well, I gotta check out your channel as well. So I will open this and put it in my other browser because I'm always interested in music. Some educational music videos as well. No? A simple way to build tension in music. Yeah, top 5 mistakes beginning composers make. Intervals, interesting. I'll be having a little look there. Oh, I use the Coinbase chart because it works best for my trading strategy. That's the only reason. Yeah. It's just that the candles and the wicks on Coinbase work better for my strategy than other charts. That's the only reason I use Coinbase. It works best with my trading strategy that I have. Yeah. All I see is a big as fuck W. The patterns, right? W pattern. Majority of the short liquidity has been taken. Market maker is likely to send the price down now. Well, at the moment, it's doing a good job. Sorry, in the daily bearish scenario, you mentioned it's short-term bearish, long-term bullish. Yes, as in we are headed down now for a low low, but continuing up afterwards. That's correct. Yeah. So you have a three-wave down in a zigzag, and then you want to see a move back towards the upside on the daily time frame. Are you looking at CME gaps? Not really. Gap at 20k is nice confluence for the bearish scenario. Yes, it is, because it is one of the targets as well for Elliott Waves. 20k, 20 to like 24, I suppose. What you just described about your preferred range over the weekend and then next week doing a big wick to take the high and move down, that's exactly Wyckoff distribution. Ah, there you go. We're doing some Wyckoff distribution. Yeah, like I can imagine Wyckoff is great in ranges, and ranges equals wave force, I suppose. If you ever get the time to look more into it, I'm sure it will bring even more joy. Harmonics, Wyckoff, very interesting, no? I'm new in trading. It's very interesting. Can you help me to learn more? Yes. I would recommend to first check the links in the description, free sources. And there's 3 links, basic, detailed, more info. And these will definitely help you out to learn everything you need regarding Elliott Waves. And if you want to join the community, feel free to check out Discord, which is free as well. And if you want to do other stuff, you can check the memberships, I suppose. But a lot, like I learned everything for free online. I think that I think a community would have helped me. I was like, there's no really Elliott Wave. I didn't know about other Elliott Wave communities back in the day. And Discord, there's so much great stuff going on in Discord, which of course you can just link in the description. It's very active as well, which is always nice. Some harmonics I see is, Abaddon is back in the chat. Oh, here's the rings of Liquid Mafia. This guy is sick with links. But there's a lot of Elliott Wave related. Perseo counts a lot. So, yeah. Just remember that time back early September, it's the bigger version of that, which could very well happen again. Absolutely. Whoop. Like, you mean this September, move up and then continue, but then on a higher time frame, basically. Oh wait, I'm still on log. Oh. I like your style, bro. George Martin, thanks for all your comments as well, George. I appreciate your comments on YouTube, man. I always see them. Of course, I always reply to every comment. If sometimes I don't reply for a day, you'll get a reply the next day, because I also run another business. I'm a keynote speaker globally, and can't always answer, but you can always expect an answer. Only when comments start to get too much, that's when I'll probably have a problem. Have you tried Elliott Wave indicator from TradingView? No, not really. I am the indicator. No, that's just a joke. Sounds very egoistic. No, I actually have never. And the thing is, I also think they don't really work. Oh wait, this is symbol search. Like the best thing, like, of course. Wait, how can I find this? What are we talking about here? Wave trend, Elliott Wave chart pattern. Is that like? Okay, not interested. looked like oh, here, oscillator, impulse, zigzags. The thing is, I think like you can use an indicator, but I'm like 100% sure it's not gonna, it can help, but it's not gonna be correct. You know what I mean? The best thing is always, let's do the oscillator thing. What's this? Oh, I have no idea how to read this. Okay, so this is not working. Of course, the best thing is to put time into learning Elliott waves yourself so that you become your indicator. But the thing, of course, is with this is it's a shortcut. But you might be able to use it. So I would use an indicator, but I would use it in confluence with my brain, right? So I would study Elliott waves, and then you can add something to see if it increases your readings or probabilities. But I wouldn't only, if you don't know Elliott waves, I wouldn't just get an Elliott wave oscillator or whatever all these things are, of course, and then use this because I'm pretty sure it does not, it's a shortcut to, of course, using Elliott waves. However, so indicators can definitely work, by the way, RSI, stochastic, CVD, Elliott wave indicator, but you still need to build a strategy around it. So you can use an Elliott wave, what is this? Elliott wave impulse, no idea what this is. It's loading. So you can use an indicator, right? But then you still need to build a strategy around the indicator to use it properly. And that is where the time is going to come in. So I don't believe in indicators that say buy or sell. But I do believe in using indicators in the context of a strategy or plan that you have developed yourself. And then I think that indicators are best used. So you want to use them in addition to other requirements. Randlewa, go diamond or go home. That's my man. That's Randlewa, my UK buddy. There he goes. No, I mean, thanks, of course, for being in Diamond. It's a great bunch of people. There's so much going on in Diamond. Hey? Matchy HK, oh yeah, indicator, Doxy or Dox Pleasure, perse. How are you doing? I was looking in silence trying to count this move. Yeah, it looks like a little impulse to the downside here. Could be a potential zigzag for a weekend range, a beginning. Maybe you get A, B, C, potentially a triangle throughout the weekend. Or WXY. But I'm doing good. What's your trading platform? BingX, no KYC required. Link in the description if you're interested. And it's been amazing. I really enjoy using it. So you can check the link in the description if you want to support the channel as well. If you don't want to support the channel, you just Google and find BingX yourself, I suppose. No. Yeah, I use BingX myself. Which is the only partner we have in the channel, which also, I used to have more partners, but I had more partners so that I could see what platform my community liked using the most. BingX was by far the most popular platform that my community enjoyed using. Of course, the numbers, I mean, I'm not a big YouTuber, but in comparison between Bybit, let's see, we had Bybit, KuCoin, we had BingX, MEXC, and I think another one, but BingX was number one, MEXC by far, and then you had MEXC on 2, and the rest was like nothing was happening. No one. So yeah, and I trade on BingX as well, so that was a nice coincidence, and I really enjoy it already for a long time. So yeah, I also prefer to have a partner that I use myself. You know what I mean? Because I don't want to. It's not like selling, but you don't want to sell shit you don't use, if you know what I mean, right? You want to have partners that you actually use. Yeah. On log chart, use log fibs. Yes, correct. No, on the log chart, use the log fib and the log extensions. Yep. Matchy HK, thanks, man. Thanks. I appreciate it. That's very kind of you. Thanks for the support, mate. Do some stock futures, yeah, and it's a very wide platform. Like there's so much going on BingX. with what you can trade there. Does the video get disconnected? I have an excellent connection and no package loss, so I think it's on your side. Would you say that we have a... Oh, I forgot about this. Oh, for the people that are still here. I do have psychology scenarios. But I don't know, we're maybe like, look, this is of course in addition to, I suppose, the Elliott Wave analysis. But I think, look, I love to create hype and I love to create fear. I mean, I don't create it, the chart. So at the bottom, everyone is super scared. That's where it's interesting to reverse, people missing out, no? But over here, we've been ranging for so long after quite a move up. I can imagine people, first of all, get confused, so they're like buying, selling, because they have no idea what's going on. But I can imagine quite a lot of people look at the trend line here. And it's so simple then, right? Like trend line, and you have 3 touches or 2 touches. Is it really going to be that easy that people that use trend lines, which also can be very effective, trend lines, patterns, you can trade them very well as long as you have a strategy and a plan. But I'm just curious, like one of the first things you learn are trend lines, probably trend lines and patterns, like myself. And I'm like, you know, is it that easy that break the trend line, you just long, put your stop loss down here and off to the races? And I was like, yeah, would everyone win? Of course, this is no Elliott Wave. Like we went over the Elliott Wave analysis and all the probabilities. But from a psychology scenario, I love the move up. But and this is nothing to do with probabilities and Elliott Waves. This is what I love, okay? And I don't care if it goes up or down. But this is basically the get wrecked scenarios. You create hype, people are buying. Then what you do is move down, hit all the stop losses, move quite far down, 22K, 20K, maybe even lower, which then leads you to this. Price moves down, people think, oh boy, right? Because the ABC, like the newest traders, they have a lot of emotion, usually, right? So what happens if you break down and you go to the low 20s? They're like, oh, fuck, we just go for new lows, right? What do they think if price goes up here? They think, hey, new highs, new all-time high coming. So it's just about like, with the head and shoulders, yes, but I don't think we reached the target. I don't think we're going to reverse. So you fake out the trend line first, then you fake out the head and shoulders and you move back up. This is, again, this is not Elliott Wave related. It has nothing to do with probabilities. This is just 2 get wrecked scenarios, basically. Like, how can you make most people not win in the market, I suppose? Yeah. Ozan's short position is getting better. There is a great quote, which is from, what's the author? From Tom Hougaard, and he says, most people are fearful when winning and hopeful when losing, while they should be fearful when losing and hopeful when winning. Which means that when people get into drawdown, they tend to hope for price to return. They move their stop losses because they don't want it hit. They add to their position to get a lower entry. They're hoping, but they should be fearful. They should be like, okay, I have my level, my stop loss. I don't add. It's just depending on your strategy, but you know, I stick to my plan. And when people are winning, people tend to be fearful, like, oh, I might lose my papered profits during a drawdown. It might come down and hit my stop loss at break even. Maybe it's not going to hit my target, so let me quickly TP before it hit my actual target based on my strategy and plan. So they get fearful when winning, while actually you should be hopeful when winning and fearful when losing, which is a mindset change. Oh, your context. I was referring to my ring analysis for that time in September. I see. I'll check your rings in a second. All the target settings, go to this website, which is the detailed website in the description, the second link. Elliott Wave detail. It comes from this website. Of course, I tweaked some stuff a little bit, but literally like most of everything I use can be found here. And you can just read through it, learn a lot about Elliott waves, and then also use the fibs. And the colors are explained. Just read through the introduction up here. Yeah, and all my templates are, you know, it's like in a gold stream I go through all of them, but you can literally find them there. Okay, how deep does a wave 4 go? Most commonly the 236, 382 and the 05. Most commonly the 382 and the 05 for a wave 4. Right? Most common 382, 05. Very rare the 146. Also common, I already mentioned. Little less common is a bounce on the 236 unless you're in a very bullish market. But the 382 and the 05 you will see most commonly. Invalidation for me is always the golden pocket, which is extremely rare, but usually an invalidation, most commonly at least. It's very, very rare that hits. Okay, everyone, we have gone through a lot, and I still have other business to do as well. I have an interview for Dutch media in 18 minutes, so I got to pick that one up. Got to call my colleague as well. We had the business meeting earlier, and got to call him as well because he tried calling me. He called me 3 times. Oh no, wait, once. The other guy, the interview guy, called me twice. So we went, for the people that just hopped in this live stream, we went over everything Elliott Wave related, from the cycle monthly chart till the 15-minute 5-minute chart as well. So if you just joined, make sure to go back to the beginning and check it out. We went first over all the bullish scenarios, then the bearish scenarios. And while I'm talking, I explain the probabilities per scenario as well and what is happening. So I hope you found it informative. 7 p.m. Central European time, there's going to be a new update, which is in a couple of hours. So let's see if we get any new information which is relevant for a new update compared to the stream. But you can expect something nonetheless. For the golds here, there's a stream tonight, Friday feedback. So if you have time, make sure to hop in. And for everyone else, of course, have a great day. Enjoy your weekend as well already, almost there. And we will be seeing each other very soon again. So thanks for watching. Bye-bye.